So, hello guys, welcome back to my YouTube channel. It's CalFX here. So in today's video, we will talk about the three conferences you need to keep in mind when choosing the right order block to trade from, right? So guys, before I get into the video, I got to do the disclaimer stuff. I'm not a financial advisor. Any topic discussed here is based upon my own experience and my deep understanding of smart money concepts. So after you watch this video, make sure you back test and you forward test it using a demo account, right? Let's get into the video. So it's important to understand that not every break of structure that we see in the market presents us a clean OB to trade from. And the reason for that is because there are certain confluences we need to see that can add up to the probability of that order block to be being tradable. So what I mean about that is that we have three confluences that we need to see in order for us to validate an order block to trade from. And number one is price must break structure. Number two, price must have a huge volume or momentum and the impulse move that causes the break of structure. And number three, price must leave imbalances. So what do we mean about imbalances? Well, imbalances means that, for example, when we see a strong candle to the upside, right, and there is no wicks right here, what it means is that the sellers, they couldn't counter the buy move. The buy move was so strong that there was no sellers to counter the move. That's why we won't see a wick coming. When we see wicks coming, pretty much filling the imbalance, that means that the price action here is efficient. So there is no reason for price to come back to this order block right here. So having imbalance is a very important confluence to see. Now there is a fourth, which is I consider as optional, right? Is when price actually sweeps liquidity. And when it sweeps liquidity, that's what we call a strong low, especially in this situation where we have the buy schematic right here, right? A bullish order block schematic. This right here becomes a strong low because it grabbed liquidity from the low and then it went on to take liquidity sitting above. So this is what we call strong low. And the reason, pretty much the theory behind it is that means the institution sold to take out the liquidity that was sitting at this previous structure low, right? So they sold and then they bought immediately. What happens is that they need to come back to this order block pretty much to close this sell position that they first opened. And we know they don't use stop losses. So this sell position was previously in drawdown when they bought. So they need to come down to mitigate that sell position and carry on the move to the upside. So the reason why I actually wrote that as option, even though it's a very important rule, right, is because sometimes we won't have the liquidity grab. What I mean about that is sometimes we will see price actually coming, and for example, this low was supposed to take out the high. So we have a failure on of price putting a high. So then we have a break of structure. And still, if we have those three confluences, which price must break structure, right here, and it can be this one as well. So price broke structure, we have huge momentum, and we have fair value gap. This order block is still tradable, even without the liquidity grab, right? So that's why I actually consider that as to be an optional, because there will be situations where we won't have the liquidity grab. Okay, so same thing when it comes to the sell schematic. We want to see, it can be, we can have a liquidity grab, which we consider this to be a strong high, and then we have a break of structure. So we want to have that. Number one, price must break structure, huge momentum on the impulsive move that causes the break of structure. And then number three, we want to have fair value gap or imbalances left, showing that no bias, the bias couldn't counter this sell move, right, to break structure. Okay, so these are the three confluences, guys. I hope you guys take note of that. So let me just erase this and let's look at one example in the markets. So here we are on Euro USD. As we can see from the daily time frame, I mean, just to do a quick top-down analysis, if you look at Euro USD, I mean, on the daily is bearish, right? We can see that we have this extreme order block. If you mark your swing structures, we have this low, this high, and this previous low. So what was responsible for the break is that here's one thing that is very important to understand. This high right here, this is what we consider a strong high. Why is that? Because it grabbed liquidity sitting at this structure, previous solidified high, and then it engineered the move that went on to take this previous low. So we had a break of structure right here, and we can see that there was imbalances left right here, right? So that is a very valid order block to trade from, okay? So for people that trade for example, for people that don't have time, they could have traded straight from the daily time frame and make sure you cover the validation point above, and your target should be this previous low right here, right? But as a means of being able to increase your strike rate, I would recommend to go, for example, to lower time frames. So, for example, let's drop down to the 4-hour time frame. So when we come into the 4-hour time frame, we can see that the price is still bullish, okay? So we had this high, have this low, and then price made this high. This candle right here, this, some people call it inside bar, but I don't consider that to be a solidified low from a 4-hour time frame perspective, okay? Now, here's the thing. When we have a 4-hour bullish structure, right? We have this high, low, and high. What we can do is we can drop down to 15-minute time frame and look for the structure shift to the downside, pretty much just that 2 breaks of structure to give us a confirmation of bearish order flow. Pretty much we can ride the bearish order flow towards our POI sitting below. Okay, so let's drop down to the 15-minute and let's look for a clean order block to trade from, so we can sell as a means of riding the bearish order flow towards that 4-hour bullish order block. So when we get here, what do we see? We have this high, we have this low, right? And then we had this high, and then we have this low. What happened? Price actually swept liquidity here, took out the previous high, right? And then we had a change of character right here. So we can see that this right here, this pretty much this order block right here is a strong high, right? This is a strong high because it took out the previous structure high and then took out the low. So we had a mitigation right there. But as we can see, we don't have a very clean UB to trade from in this scenario because pretty much there is, there is no, there is this inefficiency right here, but we can see that price actually came here, had some reaction, pushed to the upside, and then broke structure, right? So in this scenario is where the first break of structure doesn't present a clean OB to trade from. Wait for the second break of structure where you have that bearish order flow transition, okay? So we can see that, okay, right here, we have the change of character. We consider this to be boss, right? Then we want to see price actually coming back to mitigate so it can provide us an invalidation point, right? So, okay, price came back, provided us an invalidation point. Now we have the second break of structure here, very clean. Now, what are the 3 confluences? Number 1, price must break structure. Number 2, price must have huge momentum on the break. You can see these strong, just bearish candles right here, this strong momentum. Number 3, we want to see imbalances left, fair value gap. So we can see that we had imbalances right here, right? So this is actually a very clean OB to trade from. We can actually mark, you can mark from the wall candle, or you can just use this because it's inside this wall blue candle, right? So this is just a little refinement, right? So we can set the limit order from the open and we can cover our invalidation point. This invalidation line means that if price breaks this line, it will just invalidate this bearish structure, okay? So make sure you always cover the invalidation point. You can give a 10 pip, a round number, and also give a nice buffer. Now, what we're trying to do here is, we know that the 4-hour is still bullish, okay? So pretty much here, we just counter trended. But we had the 2 breaks of structure and we had the 3 confluences on our OB. So this is very valid to trade, to take a trade from, right? So all the way to this 4-hour, that's pretty much what we want as a scalp, right? Just to get in and get out, 10-hour, right? So let's play price. Price comes, tags you into trade, and then it hits, it smashes the TP, right? So it was a 10-hour right there, right? So as you guys can see, it's just the same thing, right? 2 breaks of structures, 3 confluences. Price must break structure. It must have a huge momentum on the break, and must leave imbalances, okay? So let's hop to another example. Now, we have this example right here where this is New Zealand dollar and we're on the 30 minutes time frame. Now, when you look at the structure right here, you can clearly see that we have a nice bearish order flow right here, and we have our order block up here. Now, let's say we just scalpers, right? We don't want to wait for price to come back to our POI above. We want to be able to scalp, right? We want to be able to scalp on the lower time frame, such as 3 minutes or 2 minutes, all the way up to our order block, right? Our point of interest sitting above. So let's drop down to lower time frame, such as it can be 3 minutes. And let's just read structure, okay? So when it comes to structure, right, we can see that, okay, we have this low, we have this high, we have this low, and we have this high. This is the swing structure. We're just marking swing structures, okay? So we have this low. In order for me to buy, what do I need to see? I need to see that bullish or the flow transition, pretty much giving us a signal that now the 30 minutes is about to do a pullback towards the point of interest sitting above, okay? So let me just mark the high that I need to see being broken is this one right here. So, okay, price actually just broke structure right there. Let me just play price. Now, the question is the order block, I think I pressed, let me just come back here. Now, the question is there any clean order block to trade from here, right? I mean, we're not seeing anything cleaner. Let me just drop down to lower time frames. I mean, we have this guy right here, right? We have this little candle right here. This actually is a very valid order block. We can see that this low actually took out this liquidity right here from these candles and then pushed to the upside, right? But as we know, this is just the change of character and is not a confirmation of trend reversal. It's just the change of character, right? So we need to see price mitigating the change of character and give us a second break of structure to confirm the bullish or the flow transition. Okay, let's play price. So okay, boom, we got a second break right there, right? So we have a second break of structure right there. So another block right here, we can see this down candle before the up move right here. And we can see this little candle. If we drop down to 1 minute time frame, we'll be able to see this down candle right here, right? And we have these two candles that are still inside this range, this OB range, right? So it's very valid for us to set a limit right here. We can just put our stop loss right here. We can see that, okay, we had the first break and mitigation, so this provided us an invalidation point, which means that if price breaks above below that line, it will just invalidate this bullish order flow right here. So I can set my limit order right here at the open. I can cover the invalidation with about, it can be 5 pips stop loss, right? Right here, correct? So my target is just to target this 30-minute high right here, right? I'm not trying to shoot to the moon. It's just a way to scalp all the way to your high time frame POI, right? So when it comes to order blocks right here, we can clearly see the three confluences playing out again, right? We have price broke structure. We have a huge momentum on the break. You can see these huge bull candles right here. And then we have a fair value gap. We can see the imbalances that was left right here, right? We can see these fair value gaps right here. We had a little bit of gap right here, right? So we have the three confluences right there. It's a very valid OB to trade from. So now let's set a limit and see what happens, right? So price comes, boom, takes us in the trade and smashes TP right there, right? So it was a quick 1 to 5, right? So let me take you guys to the last example. So right here, we on USD CAD. So price right here pretty much just tapped a weekly supply zone, right? So when it comes to weekly supply zones, I will always recommend to wait for a daily or 4-hour change of character, right? So price got here, we had a 4-hour change of character. Now we can drop down, we can see that right here, we had imbalances in this break of structure right here, right? So we had imbalances, we had the huge momentum on the break, right? And this is a tradable order block, right? But we don't trade from 4 hours, right? But for people that want to trade for 4 hours, that's totally fine. But as a means to just increase your strike rate, I would recommend drop down to 15-minute time frame, right? So let's drop down to 15-minute time frame inside the 4-hour, right? POI mitigation. So we come here and we try to look at our swing structures, right? We can see that, okay, this was the low, the high, then we had this low, then price actually took out the high, and then we had a nice change of character right here. So we can see that this is a strong high because it took out the previous high and then went on to take the previous swing low, okay? So if I just mark right here, the break of structure, right? We have a nice break of structure right there. Let me just, yes. So this right here is a very valid order block to trade from, especially from the 15-minute time frame. You can just set a limit order right here, right? With about 11 pip stop loss, right? And try to get a nice 1 to 6, 7, right? But we can drop down to lower time frames soon price actually gets into the POI, right? Especially as a scalper, I always like to use the 1, 2 minutes, 3 minutes time frame. So soon price actually gets into your 15-minute POI, we can drop down to the 2 minutes, 1 minute time frame, right? And we want to look for those 2 breaks of structure mitigation play, right? Pretty much what gives us a signal that, okay, price now is ready to drop to the downside, okay? So we want, first of all, we had a break of structure here. Why is that? Because when you look at your swing structures, that we had this high, this low, and their price made this high. So this low was only broken right here, okay? This is just marking up swing structures, very important, okay? So then we have the successful retrace, but we don't have a clear zone to mark our invalidation point. So we will have to wait for another break right here. So have a break of structure. We have this order block right here. So we want to have that invalidation point is very important, guys. Okay, so we got the mitigation right there, and then we had a second break of structure right here, right? So pretty much we just had 3 breaks of structures, right? And then we have this order block right here. Now, what are the 3 confluences? As I said, price must break structure. The price might have a huge momentum on the break, right? On the impulsive move that caused the break. And number 3, we must have a very fair value gap right here, left, right? And we have a clean OB to trade from, very valid, right? So this is a tradable order block. We can just set our limit at the open, and we can target the 1 minute previous low, right? As a scalp, 9 pips stop loss, target this low for about 1 to 3. I think price at least give about 1.5 RR right there. And so this is pretty much, I mean, very repetitive, right? This is all these are the 3 confluences we need to always keep in mind. We must have price must break structure, must have a huge momentum on the impulsive move that causes the break, and we must have a fair value gap, right? Which means that in this particular situation, the buyers couldn't counter this sell move right here. So the momentum, you can see the bearish momentum was in our favor for sales, and the setup ended up playing out, right? So I'm gonna end the video right here, guys. I hope I was able to explain pretty much the 3 confluences that we need. If you guys would love to, I mean, feel free to join my free Telegram group right here. Pretty much this is where I share all the market outlooks every single day. You know, couple setups or that are, you know, during the week for so you guys can take advantage of it, right? So make sure you guys actually join my free Telegram group, and I see you guys in the next time.